Welcome to Invested Insider, your trusted source for the latest financial news and insights. My name is Jason Reynolds, and today is the 23rd of August of 2023. Today we dive deep into Nvidia, the chipmaker that has become synonymous with the AI boom. Buckle up, this is going to be an informative ride. Let's start with some context. Nvidia isn't a new name for tech enthusiasts. Originally known for their graphics chips in video gaming and cryptocurrency mining, they've shifted gears and are now at the forefront of the artificial intelligence wave. Here's a stat to put things into perspective. Nvidia's stock has surged by more than 200% this year alone. That's a remarkable leap even for a tech company. So what's driving this meteoric rise? As we've gathered from multiple sources, Nvidia's ascent isn't just about gaming or crypto, but primarily because of its near monopoly in producing chips essential for AI programs. These aren't just any chips, these are advanced graphics processing units, or GPUs, critical for training generative artificial intelligence models like ChatGPT and Stable Diffusion. Remember the recent success of ChatGPT last December? That created a ripple effect, leading Microsoft to integrate it into Bing and prompting Google to launch its version Bard. But here's where it gets even more interesting. Despite the impressive growth in sales and the increasing application of AI, Nvidia's stock isn't just rising because of numbers on a balance sheet. A lot of this surge can be attributed to market sentiment and expectations. A stat that caught my eye was that Nvidia added a whopping $890 billion to its market cap in just 10 months. To put that in perspective, that's more than the combined valuation of JP Morgan Chase and Walmart. Astounding, right? However, with rapid growth, there are always questions about sustainability. Nvidia's price-to-earnings ratio, a key indicator many investors look at, skyrocketed from 50 to nearly 250 since last fall. For reference, the median for S&P companies sits at about 25. This might raise eyebrows for some investors, leading them to wonder if the stock is overvalued. Now let's talk leadership. A key figure behind Nvidia's success story is its billionaire CEO, Jensen Huang. Described as the godfather of AI, Huang's net worth ballooned from $14 billion to $43 billion this year alone. Leaders like him are essential for steering a tech giant, especially during transformative periods. The demand for Nvidia's chips, particularly the H100, which can cost upwards of $40,000 each, is undeniable. Major players like Microsoft, Alphabet, and Amazon are investing heavily in them. This is because, as many reports suggest, traditional CPU-based servers simply aren't up to the task of training and operating advanced AI programs. And this is where Nvidia shines. However, there's a challenge. While the demand is soaring, supply is bottlenecked. All of Nvidia's GPUs are manufactured by just one firm, TSMC, in Taiwan. With TSMC struggling to keep up, clients might experience delays and potentially higher prices. This supply-demand imbalance is certainly something to keep an eye on. As we look to the future, Nvidia is set to play a pivotal role in shaping the AI landscape. Yet, it's essential for investors and enthusiasts alike to approach this with both optimism and caution. The AI boom holds vast potential, reminiscent of the internet surge in the mid-90s. But as history has taught us, rapid ascents often come with their set of challenges. That's a wrap for today's deep dive into Nvidia. Stay tuned for more insights into the world of tech. Remember, knowledge is power, especially in this ever-evolving digital age. I'm Jason Reynolds, signing off.
The Invested Insider podcast does not offer any financial, economic, legal, accounting, or tax advice or recommendations. The information provided in this podcast or on the associated blog should not be construed as investing or financial advice and should not be considered professional advice. The views, opinions, and content presented in this podcast do not represent the endorsement or approval of Invested Insider and assumes no responsibility for the accuracy or completeness of third-party materials or content referenced in the podcast.